So that major thing is how you execute your trades. All right, and that's what we're talking about today. Trade execution. Right? We're talking about trade execution, which is how do you get in, how do you get out, how do you, let's write down, entry. What's your entry like? How do you enter the market? Exit. When do you know that it's time to leave the market? Accepting loss. Wins. Also going to talk about wins. Partials. Securing risk. Okay, so I want to touch down on these things, just so that we have a better understanding about all of this stuff. So, first things first, what's your entry like? How do you get in the market? Are you the kind of person who you have a current interest, for example, right? So let's say we have this here. Okay, so you have a current interest, for example. Now, let me draw something in the charts so that we can get. I'm gonna have a drawing. Then we decide. So let's say that you have a current interest, which is right here, okay, in the market. Which I have this color box here. Now, as prices are approaching it, as prices making its way to the downside, right? And somewhere around here, price. Let's say, for example, you had this area marked up as liquidity, and you had this area marked up for interest. But just because you saw that liquidity was already taken and price started to make a push up, are you the kind of person who would then think about getting to buy just because of this push up in the market, right? Forgetting that you're in a downtrend at that point, right? And this is just a lower low. And there is no confirmation whatsoever telling you that the market wants to go bullish at that point. What you still have is a bearish market. So are you that person who would try to buy just because you can't wait for the price to get to your current interest? And then what happens is you lose. You get into a loss, price gets there, then that's when price starts to be bullish. Has this happened to any of you? Has anyone experienced this before? Okay. So I said this was me a lot. So yes, you know why it happens? It happens because the market understands emotions, right? And they tap into your emotions every single time. Okay? And here's the thing. The thing is because you as a human, when price is bearish, you are only paying attention to the lower highs. You're not really paying attention to the lower low because you want to always sell high. Now, when you see a lower low, you're always scared because you feel like price is going to take you out. So let's say, for example, right? Now, let's say, for example, price is making its way to the downside. I think I have to clear up all this mess. Okay. Now, let's say, for example, price is starting to make its way down here. Alright, now, and you're here, you got into a sale right here, and you feel like you want to take out liquidity and head to the current interest, which you already have. But when you start to see price making this push up, do you get scared because you feel like price is going to take out your entry? Has that happened to you before? Do you get scared? Do you feel like, oh shit, let me get out of the market? And then you close your trade, and as soon as you close your trade, price dumps down again. You know why? That happens because we are always paying attention to the lower highs, and we don't understand that lower lows will always happen. Alright? Why will it always happen? It will always happen because price has to create structure. Price doesn't go this way. Price has to go this way. So when it's going this way, your psychology is now paying attention to buys instead, forgetting the direction of buys at that point. So every single time you see this buys show up, your psychology gets played out, and then that's the moment when you start to ask, oh shit, did I get into the right trade? Is this a buy? And then maybe price has even done the lower high, which is the next entry and the next order flow to the downside, taking its liquidity wherever it wants. And then at this point, you're starting to feel like you could play off on SC around here and price swipes you out. It's because of the fact that one, understand price direction. It is very, very key, very, very important. So don't really pay attention to just one side of the market. Pay attention to both sides of the market and understand the direction and time frame, directional and bias. So in a case where price hasn't got to your point of interest, what you need to do at that point is wait. Okay? So don't be a scapegoat where you're this kind of person. Liquidity is grabbed, price makes a push up, maybe even sometimes does something like this, and that is what we call a complex pullback. And then you are beginning to try to clear off because you see this as a bit of structure, forgetting that the order flow at this point is still bearish, and you have your highs, and price still swipes you out because it hasn't gotten to the point of interest just yet. Okay? It happens a lot of times. You forget that this is also liquidity, and the price takes out a lot of liquidity before it then goes bullish. Right? So what you can do here is understand that you need to wait for price to get into your point of interest. Even if price does something like this. Okay, now, let's say even if price does something like this, yeah, is that what you call complex pullback? Yes, that's what I call complex pullback. Now, even if price does something like this and then you miss the trade, understand that that is okay to miss a trade. It is okay to miss a trade. Okay? Do not hit yourself hard just because you missed a trade and make you feel like you're not a good trader or you don't know what you're doing. Or nah, you missing a trade doesn't mean any single thing because you're always going to get another opportunity. There's numerous opportunities in the market every single week, and it's just for you to be patient enough to catch quality moves. All right. So even if you miss it, understand that's okay to miss trades. So, but major thing is make sure you wait for price to hit your point of interest. If price hasn't hit your point of interest, chill. Okay? And then maybe at some point around here in the market, when price has broken this structure, significant structure, that's when you can think that, okay, you know what, I'm going to buy, maybe a pullback is going to happen within the fractals, and then that's when I'm going to get into a buy. Or maybe a pullback is going to happen somewhere around here, and that's when I'm going to get into a buy, because now you've seen a price that shows you that that's what's going to happen. Okay? So when it comes to entries, because that's the first most important thing in the market, you need to have a point of interest first. The original point of interest should be marked up. Okay? First things first, you need to plan ahead of time, ahead of price. So anticipate what price is likely to reject from. And then when price gets here, you wait for a bigger structure to happen, and then you buy. Okay? Don't just buy there, don't just set limit and buy there. Wait for price to tell you that it wants to now go bullish. That's another thing. Right? That's another thing. That's another psychological aspect to it. Now, how many times have you seen? How many times have you seen, even if when you have the point of interest, how many times has something like this happened and then something like this happened again? Have you guys experienced this before? Even when you had, like, it was so neat, everything was so clean, but even when you were in profit for a little bit and you were so excited because now you've got the move and you're feeling so good, but what happens next? Price just shuts down. Do you know why? Because that's what price wants to do. It is bearish at that point. Okay, and it can decide to continue the bearish move even if it wants to. So you losing the trade or you hitting break even is okay. It doesn't mean that you are a bad trader. It doesn't mean that you got into the wrong trade. It's just the market doing what it wants to do. And then when that happens, you use that information to sell. Since it has now shown you that buyers are not working at this point, so maybe sellers are not working. All right. So when stuff like this do happen, do not really take it hard on yourself. Do not really allow it play out on your emotions or in trading and make you feel bad about anything, because anything can happen in the market at any point in time. Any single thing. The market can decide, you know what, anything can happen because the market can decide to break structure anytime it wants to. Okay? And when market breaks structure, it doesn't make you a bad trader. Right? It just makes you understand that this is what the market wants to do. And then you use that information to understand what you could probably prepare for next, which is onto the next trade. Okay? So that is one thing about all these things I've just mentioned here. Okay, that's about
Is it possible for you to expand a little bit on the complex pullback? We kind of have a question about that.
Okay, what did you say?
Can you expand a little bit on the complex pullback? Because somebody else asked in the chat, and I'd like to know your definition of what it is.
Okay. So a complex pullback anyways is, so let's say you're in a downtrend, right? And then in this downtrend, something like this happens. Okay. Now, when you measure out the swing of that move and it isn't up to 50% of it, there is a very high probability that price is going to give a complex pullback, because at this swing, there was no premium price taken, and premium price starts from 50% of the gold, right? And so what happens is price takes that premium price and then continues to short again. And that still makes up your bearish market. Right? Okay. So that's what we call this pullback, where excess liquidity is left and premium price is unfilled. So price fills it up and then trades. So that's what we call complex pullback. Right? Okay. So next is exit. Where do you know, or where do you get out of the market? At what point do you tell yourself that, okay, you know what? I've made a lot of money. This is the target I looked at for. Now I can close my trade. Okay, you know what? Price has got into an area which I really, really didn't even think was going to get to. And at this point, I'm not going to get greedy. At this point, I'm just going to get out of the market. Or a situation whereby you're like watching price action, and while watching price action, you see that it is now showing you a lot of strong signs that you can possibly get taken out. Do you tell yourself to exit, or do you tell yourself to wait? That maybe that is just a pullback about to happen, and then you can maybe catch your entry. So there's a lot of psychology that goes into knowing when to exit the trade. There's a lot, alright? A lot. And sometimes, and this happens when you're like deep down in profit. Okay. Sometimes greed comes into play and you're like, oh, this is going to keep going. It's going to keep going. And at the end of the day, it never keeps going. It just drops and takes you out of the trade. That's happened. That's happened to me a lot of times. I'm sure that happens to every single person here as well. Times whereby, you're in the market and you just go into the market and maybe price is 10, 15, 15 profit, and you're watching price action, but the candlesticks are not closing well. and there's a probability that price might just take you out of entry. So what do you do at that point? Do you now start knowing how to manage your risk at that point? Or do you exit the market at that point? What do you do when it comes to getting out of the market? How do you handle the psychology behind getting out of the market? Alright. So this is a whole lot actually. It's actually more than it is for entries, because entries are quite simple, but exits are one of the hardest things to pull yourself into, to commit to. And one, that's because of greed, most importantly, right? Greed is one of the major factors, in the market. Exits, trust me, exits are the most difficult. It's not even entries. Exits are really difficult because you're like, what's going to happen? I might be right and price might drop a shit low. Okay, just take for example, let me give you like a very nice example. Gold right now, right? Gold at this point is a very good example to use. Okay. Someone said for exits, I just chose stops. That's fine. When I close, you continue, and when I don't close, stop loss coming. Psychology. Okay. Now let's say, for example, here, this sell that got into somewhere around here. Let me take you through how I manage my trade in this move. How many pages is a trade plan? My trading plan? Nah. You guys want to know the funniest thing, yeah? Like, I barely write anything down. To be honest, like, I'm not too much of that kind of person. I used to be, but right now everything is just in the head, basically. So I just do it according to what I know. So getting into this cell right here, alright? This was my target. This was my target. I never, like, to be honest with you guys, I never expected that we're going to drop this much, right? Look how much we dropped. I only thought this was my only exit at that point. And because why I had that exit was because at a point I was bullish on gold. I think everyone can testify to that, because I felt like we are gonna fill up all of this. I felt like we didn't make 50% pullback as well, and all this kind of thing. So I felt like we are gonna go bullish at some point somewhere around here. And so I was like, let me just sell here, and that I'll call it trade. Okay. But what did I do at that point? Did I get here and then go against my plan because that's how I wanted to get out? Or what did I do? So here's what I did, right? I stuck to my plan. As soon as price got to that area, I closed my trade. Like, I closed the full position, because that was already what I told myself. Okay, you know what? I'm going to sell here, and that's it, because I don't know what's going to happen. I have no idea. Nobody knows what's going to happen. Only the market knows what's going to happen. Right? So at that point, when this huge drop just dumped, because I took two entries. I took this entry right here, and then my second entry is this one, which I took at midnight. Long time like that when I was practicing, I just took at midnight. So price, is it that one? No, that wasn't the one I took at midnight. This one. Okay, so I didn't take this one. I only took this one. Now, when I took this trade, I watched price action here and understood the fact that this was a complex pullback and just getting liquidity and overflow. We'll see it on a 5-minute pattern. Okay. So that day we had this overflow here, price to out liquidity rejected, broke this structure, and then lower high will be, everything right there. So that dumped, and the moment that dumped, I took out my trade. Now, the reason was because I already planned that I was going to sell there, and my wins were good enough. I had about 120 pips, right? And it was okay for me. So at that point, I didn't want to have greed come into play or whatever. Even if the market dropped a lot more, that was cool. Okay, it was here actually. That was more than 120 pips. That was 200 pips, yes. So that was enough. 200 pips is enough for gold, trust me. Because that would give you over 20% of your account if you know what you're doing. So I had that, and that was my plan, and I exited. I didn't go against my plan. I didn't hold it because that wasn't my plan. I didn't decide to maybe buy something because that was not my plan. I just closed it because that was my plan. And the moment you stick to your plans, especially when you have where you expect price to drop to, you're going to start creating good habits for yourself. Because it doesn't matter for you to have greed and feel like price is going to shoot all the way down and then just have greed. Because what if price actually goes back up? You never know. Okay. So that is one thing. Now, understanding that if price was going to continue, I then told myself that I would have other opportunities to get into the market if I wanted to. And I don't know if you guys can remember, but at some point, I looked at the chart again and I knew that we're going to drop to 1820. And then I said in the public channel and told you guys that, okay, you know what? At this point, we're heading to 1820. So because of why I knew that was I had to take another look at the charts again, seeing how all of these lows were taken and how they broke in that area. I then looked at the higher time frame and saw that all we had here was clean price action. We knew at that point that we're going to drop onto this area because all we had here is clean price action. So that's when, knowing that, that's when I looked at for re-entry to sell again, all the way down to 20. Alright? And that happened at me. Now, when I sold all the way down to 220, which is somewhere around here, I still didn't have grid coming to play. I went out of the market. Okay. So you see how I'm building healthy habits for myself and not having any psychology play with me. Because at that point, when I decide that I want to do what I said, that I want to do something else that wasn't what I said before, I'm going to start having confusion. I'm going to give room for confusion. That's the first thing. So I'm going to give myself room to now start thinking, okay, you know what? Do I now hedge this market and buy? Just to be safe. Just so that if my sell doesn't hold, the buys will hold. But that is the wrong thing to do at that point. Because why are you buying in a bearish market where you don't even know where it's going to stop? Right? So at that point, I just let it run. And I prepared for the next possible buy area, which is another demand zone, strong demand zone, or actually IPA somewhere around here, which I saw from this liquidity grab and this order was taken. So I knew somewhere around here we're going to have some unmitigated order blocks or something. And that's why I took a buy from there. But what I did was I saw accumulation and timing, everything just made sense, and that's why I took a buy at that point, because then and I felt like it was time to buy, which was still just trading on norms. All right. Now, a lot of psychology happened here for me because I started thinking, will buys really hold? What if I'm wrong? And what if sells do happen at that point in time? How do I get out of my buy if I'm wrong? How do I make sure that I come out of this trade with a very good win and not just a shitty win where price takes me out by holding it too much? Okay. So that happened again, and that's another exit, right? That's another psychology playing on my exit. So I got into buy, and I believe I closed my buy the moment I saw this price action right here. Just right here, when I closed my buy. Because the buy already broke higher highs and started to make uptrend directions. And then at this point, we rejected all the flow. Okay. But here, I closed partials. Now, I closed about 50% of partials and then just let the rest run because my entry was quite clean. So watching price make the weight is way to the downside. At this point, I just had to wait because I saw liquidity, which is one, and then I saw an unmitigated SC that I felt could continue to push price up. And it happened luckily. Okay, it happened. So what happened was we created a new high, then we had a new low, going to a scalp buy, which I share with you guys. I believe all of us got this one. It's about 100 pips. Okay. Now, price got into a supply level. Okay. Drop, please drop. And there was a rejection, a very strong rejection, and price broke structure. So the moment I saw this was when I closed out my entry. Even on this one, I didn't allow it to hold. I closed out on both of them at that point. Okay. And that is me accepting the fact that it is now time to get out of the market, and I don't need to stay into the market any longer, because I'd seen price action and I'd seen that there's a probability that sales will still control, because that's what the stronger move and this is weak. And then I exited the market. So you got to take note of knowing when to get out of the market. When things are starting to not go according to plan, understand that you could get out of the market. Okay? And not allow greed. And at the same time, we still go into sales right here in the school. Actually had two sell entries, so these are my entries at the point at the moment. So now, there's this psychology that's going on right now with me, which is, because I'm still in this entry, so I've not closed my trades, but I've closed partials anyway. Now, psychology wise, you would feel like I need to get out of the market. And I start asking myself, what if price goes all the way? Now, what if buys happen? What if like a crazy buy happens and takes me out here, maybe comes back all the way up here, whatever? I don't know. Nobody knows, because anything can happen, alright? And then I could get taken out of my trade. Now, the reason why I'm not out of this trade yet is because this isn't my target. I never planned to sell here. The plan was to sell down here, which is 1661. Right? And I'll explain that tomorrow. Anyways, I think I've explained that actually. I think I explained that for you guys, or maybe it was somebody else. I'll explain that. Okay, so literally, the reason why I feel like we're gonna sell all the way down here, and the reason why I haven't closed out on the trade yet, is because, okay, now I think I remember why I haven't done it. 1, 2, okay. Now, I feel like this move right now is the third wave. Okay, and the third wave is usually the longest move in the market. Now, the first wave is right here. Now I'm talking about the red waves here. So the first move is 1. We made a pullback here. 2. And now we are on our 2 to 3 wave. Okay. Now this can't be where 3 is gonna end. Like it doesn't make any sense, because that is longer, that is shorter, or approximately the same compared to the first bearish trend. So this next one has to be significantly longer, probably even twice as much than this one. And you can see the bearishness at this point. Alright, straight up bearish movement. And this is what happened during the week. So this is very high volume of sales, and I think if a new candle is going to get formed, we're just going to have a push up a little bit, just so we can have the next candle week form and then continue bearish price action. Because at the same time, this is structure point. Alright, there's no structure here whatsoever. This is the first break of structure right here. There is no structure point here. Okay, so because of that fact, which actually the accumulation of others as well happened here. So because of that, I feel like we're going to head back down. Now, 2, this is the full swing. Okay, and we have not got premium pricing at this point, if this is going to be a pullback. Alright, so I know that we still have a long way to go. Alright, so these are all the things I've looked at, and I've understood that, okay, I can still remain in my trade and watch what happens. Am I making sense? And that's why I'm not going out of my trade just yet. But I have taken significant profit out of it. Okay. So now the psychology for me is I know this is how the daily candle closed. I know the next candle has to form as well. So I only expect or anticipate nothing higher than this, which is 1796. The moment price starts to go past this level, that's when I'm gonna fully close up my trade. Now that's my plan and that's my exit plan, right? That's only when I would close out my trade. But right now, we have just shown us that supply is not in control. What's this, guys? What's this? It is a drop, base drop. This is supply right here, literally. Okay? So supply is in control, and knowing that supply is in control, I have nothing to lose. Okay, I can as well still stay in the trade. So that's why I'm in there. So there's no psychology for me right now. I know where I need to exit, regardless. So that's it. Just to touch down on that. Let's go back here and talk about the next thing now, which is partial accepting loss. Again, accepting loss, right, is something that should be very, very easy for you, like very, very simple for you, right? It should be the simplest thing for you because you should understand that trading is a series of trades. All right, what you're doing is you're taking a series of trades. Now, expect nothing when trading because you do not know if you're going to win this one, if you're going to win this one, if you're going to lose this one, if you're going to win this one. You have no freaking idea the outcome of all of these next trades. You have no idea of the outcome of your next 5 trades, right? You have no idea of the outcome of the next trade. That's how you should think when taking a trade. Now, because of the fact that you have no idea, you understand that you're going to win and lose, right? You're not going to win all of these trades. It's impossible. You're not going to win 10 trades in a row. 10 trades is possible, but it is, I would say, 1% possible. I wouldn't count it out, but it's 1% possible. But there will be losses. Definitely there will be losses. And understanding that one of these trades or 2 or 3 or 4 or 5 of these trades are going to be a loss, right? Is how you should understand to accept it. Accept that it is meant to happen because it will always happen. Okay.